Hey guys, Steve here from jackrabbittrader.com. I just wanted to go over the S&P as it is breaking its 8-day moving average. And as you know, as we talk about in the weekly trading process, e-course, this is where we start to take some notice on where exactly the market may be going. So you can see that we came in and we put in it's a rough line there, but basically tried to break above the all-time highs. That failed. Now we're breaking below the 8-day, and as the 21-day continues to move up, we're going to now see if this is a bounce point, or if what happens ultimately is this is moving up, we go sideways and then break down again. And then what would happen, right? So we talk about when is the right time to play offense and when the right time to play defense is. Right now, I took, because of breaking the 8-day, started taking some profits on some of my bigger positions. Sold out of Aflac, RSG, and Dollar Tree today. Why those? Just because I was up the biggest in those. No real reason, right? We want to take profits off the table. I had some nice profits. I want to put them in my account instead of somebody else's. So took profits in those. And again, that was Dollar Tree, RSG, and Aflac today. Okay, so we took profits in those, took about $1,500 out of the market with those names. And now, again, looking at where do we go from here? We broke the 8-day. Next level is going to be the 21-day. All right, we start breaking below that, then take some more profits. Okay, right now we're in a holding pattern. We still want to be looking at putting risk on, but ultimately, where do we go? All right, if we go under the 21-day, then different story. Now it's risk off. We stay. We don't add any more risk. We're just taking money off the table. And then ultimately, if the market goes ahead and say the 8-day does this, and then the 21-day does this, then you're going to have your 821 cross. And then based on my rules and what we've discussed in the weekly trading process, what do? Well, now we're starting to play defense, right? Now we're looking to hedge with SPY puts on any attempt to move back over the 8-day, right? Similar to what happened back here in May, right? Broke the 8-day, then finally broke the 21-day. Then here was the 821 cross, all right? And then anytime we move back up, we're expecting the market to go down, right? So we're taking that trade up here, selling it down here. Taking the trade up here, selling it down here. Taking the trade here, selling here, okay? And ultimately, there's going to be a time and a place where the trade's not going to work anymore. That's right here after we cross above the 21-day, or I'm sorry, the 8-day. And again, let's clean this up. And that is right here, okay? So that's where you start to take notice on the opposite side. Market's getting stronger, all right? Now we're above the 21-day, and now there's your 821 cross, and your hedge should come off. So ultimately, you're going to lose on the last hedge, all right? But you're still long stock, and you're riding that stock higher. So I hope that helps. Again, just wanted to make sure that everybody was aware of that. And again, if you're not part of the weekly trading process e-course, you should be. A lot of good information, and basically my entire portfolio, my entire process for trading my portfolio. And that's at www.jackrabbittrader.com/weekly process. Go check it out. Talk to you guys soon.